What's up, Tom?
Hey.
How we doing?
And we have Tom from UK. Where exactly in the UK, Tom? Is it near London or?
We're right in the middle. We're about 2 hours outside of London. We're in the Midlands, in a city called Leicester, Premier League champions back in the day.
Oh, had to plug the soccer.
Yeah,
Come on, bro.
Football.
Come on.
It's football. Originally, it was originally called soccer, Tom. So we do have the I think the ladies had the football name before, but it's fine. We're as long as you're a Man City fan, we really don't care.
I'm not
pushing buttons now, boys. Pushing buttons.
Yeah, no, exactly. So, guys, hi, welcome everybody. It's been a kind of an interesting start of the year. No, I mean, we're all talking about the fact that everybody started out thinking that we're going into the next Great Depression, and actually, no, the economy is much more resilient than we thought. Everybody thought we're going to go to hyperinflation. Of course, that never happened. I remember. I mean, one of the easiest trades in the market to do is if everybody thinks that something is going to happen, there's literally almost zero chance that it will. One of the things that nobody thought would happen at the start of this year would be a soft landing. And I remember going actually on the Market Huddle podcast in November saying, I actually think it could be a soft landing just because nobody thinks it's possible. I didn't really have any great economic insight, but I did think that the economy was stronger than before. And that's really what's happened. But now we're kind of just basically from a trading point of view, I think finding ourselves into a very difficult market. And I think these are the kind of markets that actually bankrupt traders who are not careful. Would you guys agree?
100%.
Yeah,
I would definitely. Yes,
you would, because
it's January's performance. Yes,
right. As I was walking my dogs, I created a new word, non-directionality, because that's what I think we're kind of facing. It's just one day up, one day down. There's very little continuity, and as traders, we actually always need continuity. Whether we're trading reversals or trends, we need continuity to kind of make the P&L. So getting caught in non-directionality is a trademark for us. Is kind of tough these days, right? What do you think, Austin?
Well, it's tough not just because of like the fundamentals, but like you said, the technicals are at a point where maybe every day that goes by, we're at February 15th. What is it, right? As every day goes by and we don't see this big push lower, some of these people might be switching over to say maybe the October lows are the lows. But I think there's more to come as far as like the level of uncertainty. As weird as that might be to say, I think there's more uncertainty coming because what is Jerome Powell going to do in March and then throughout the rest of this year? Now we're starting to see within a week, the probabilities will shift from we're going to get rate cuts to we're not getting any cuts to we're getting cuts. We're not getting the uncertainty I think is high and will get higher, larger, whatever you want to say.
Right.
And I think that for traders, it starts to grind you and it starts to wear away at you, which induces you to sometimes take too many trades, forcing trades. That could be other frustration can come out in other ways, like an over position sizing because you haven't been trading. So like you said, this market tests you. It really does. Tom and I see it in a lot of the traders that we work with, like most of the guys that are patient are making money. The guys that are forcing it are up and down.
Right. But, Tom, would you agree that even if you're patient, the market really wears on your patience? Because even if you get, the A-class setup, it's a fake out half the time these days. In other words, because there's no continuity, so even something that sets up in the prior time that would have some continuity to it, just fizzles out a lot. And, even the best of traders can be tested here. Would you say that?
I would absolutely I would say that is very, very true. And like I'd already said, I went through my trades at the weekend, and that's exactly where I fell foul. I was trying to take some continuation trades in January and just got in at the wrong spot on a couple of them. And going back and studying them, I got chopped up. I tried to get aggressive in the wrong sort of places. And I would definitely say that the people that have been more selective and waiting for them trades, like Austin has been and a couple of the other traders, are the ones that have done best during January. So yeah, I think I would definitely agree that time in the markets now is just a little bit of risk off and just protect it and wait for some better times. 100%.
Yeah. So, given the fact that we have what I call the molasses market, where it's neither bear nor bull, it's just, chop city. What's your survival tool? Like how do you survive? I think I have an idea what Austin is going to tell me. So I'm just curious, but because you're going to tell me you sit on your hands probably, but
No.
I'm
not going to cop out that easy, Boris.
Yeah.
We're on the trading battle. First episode of the year, Boris.
Exactly. We want to know the juice. We want the meat.
Right,
We want
No, but I will
Yes.
give a good answer, a little bit
Yeah.
more elaborate than maybe just an indicator. Maybe I'll let Tom do an indicator because he probably has some good ones there. I'll say risk management is the survival tool. If you understand the market that we're in means aggressive profit taking, cutting losses as fast as possible, building rules and systems into your strategy that allow that to happen through study, through back testing. You can look at your previous trades within the strategy and say, how can we be getting out of these quicker? How can we be making more on these trades? Doing that kind of assessment and then applying what you're getting from that assessment into your risk management, that is the survival tool right now. That's why I'm doing pretty well this year so far, while some guys are getting chopped around, like Tom said.
So to press you a little bit more on this, because I'm curious.
Yeah.
In practicality, what does that mean about getting out of trades quicker? Does that mean that, that let's say, just for argument's sake, your classic stop target is 100, just we'll make it even. Your 100-point stop, 100-point target. But now, in a current environment, volatility compresses. You're just not making that 100-point target. Do you just go to like a 70 stop, 70 target? In other words, you compress both parameters to a volatility level that is more conducive to this market? What do you do?
You could do that, but that isn't what I do. So I'm taking trades using EMAs, exponential moving averages. I'm using those EMAs to determine short-term trend, and I'm looking to ride that short-term trend. I'm not trading against that trend ever. So if I'm riding that trend, once that trend changes, that's where I'm looking to take position off that trade. My rules say 50% of the trade comes off if I get an 8 and 21 EMA cross against the direction. If I'm long and they cross down, half the trade's off. Whether it hits my stop loss, which is at a fib level, it's never a set. It's based on a Fibonacci retracement. So it's never like 100 even. It's always different based on whatever the movement of that asset is doing. So wherever it's at, it could be halfway to my stop loss. It could be close to my stop loss. If that cross happens, I'm getting out of that trade.
We're losing Austin a little bit. We lost you. Come back again. So you can repeat because we just lost you for a second.
Oh yeah, sorry. Did you hear me, Tom? Can you hear me, Tom?
I heard it. Yeah.
Right. We heard you. I lost you a little bit. So you're talking about. So it sounds like I'm going to paraphrase you. You tell me if I'm correct. It sounds like, in a former market where you have lots of continuity and big range expansion and volatility is high. So when the EMAs expand and you're running with a trend, your target is always dynamic because it's always contingent on the movement of the EMAs. So in former cases, let's say maybe it's a 100-point move in the EMA. Now these things could cross after a 50-point,
Sure. But like to the risk management point, if I'm trading with the EMAs, if they cross against me, the back testing says, and Tom can speak on this a little bit, and I think it's a good point. The back testing says that that's a really bad sign for the trade. Whether you're getting 50% of the trade off, 75%, 100%, I have risk mitigation signals. So at the same point, like you said, I'm going to have take profit ideas on the way up that are variable. I don't use set take profits anymore. Then you'll have risk mitigation on the back end of that to take away if it's not working for you. So that's how I'm using risk management as the survival tool. But Tom,
one last question on this risk mitigation. The risk mitigation, does that mean that in a current environment, maybe you will take, let's say in a bullish environment, a good trading environment, you take only 50% off at the first sign. Now you may take 60% off. Like in other words,
100%.
You take, interesting. 100%. So that's dynamic too. So your defensive posture becomes greater.
And I think in a market like this, defensive posture wins because am I up 10% this year? No. People that are up 10% are taking on a lot more risk than me. My risk this year so far is relatively low, but my gain is still bigger than my risk. So to me, that's a good sign considering how many other people are getting chopped around and how many people are saying the market is slow. So I think that defensive posture is actually a profitable posture right now, at least the way that I read it,
Interesting. Okay. Yeah. What about you, Tom? What's your market survival tool? What do you sort of rely on these days in order to stay alive?
Without a shadow of a doubt, for me, it'd be my trading journal, the trader improvement program that I use every day in the Black Shirt Club and with the traders and with Austin. It's something that me and Austin have created, and it just tracks everything. And I think that being adaptable in this market has been a huge tool to stay in the game ultimately, because again, like I said, in January, I found the start of it, I just got it on the wrong side of a few things. If I wasn't tracking and journaling all of my trades and understanding why I was getting chopped around and, like you say, not seeing them continuations, I wouldn't have been able to adapt. And tracking everything that we do within the BSC and ASFX, that's allowed me to adapt very, very quickly. And
okay, let's take a look at this. So this is sort of like, could you maybe highlight 2 or 3 factors that you track that are very, very valuable to you? This is a Google spreadsheet, I guess you guys made,
so
right?
this is just literally just a spreadsheet. So first, every single day, we've got a daily report card. So this is today. I go through, I track my pre-trading routine. So do I put myself in the best mental state before I start the day? These are the things I have to check off to make sure that I'm ready. I fill out my news for the day, my watch list, and then I set my objective. So the stuff down the left-hand side starts the day. Then throughout the day, these are the trades that I've taken. Why did I take the trade? How did I manage the trade? How did I feel during the trade? And then why did I exit and what could I have done better? So that's the first thing. We do this every day. Track that. And then obviously we'll review this later. Once the trade's finished and played out, I keep a markup of all the trades that we take. So I'm able to see very, very quickly what is happening and why I'm doing what I'm doing.
So you journal, and then you also mark up the trading view chart.
Yes.
Every trade. Yep.
Every trade.
And then you save that markup and you kind of attach it. Is there a place to attach it?
If I was Tom's coach, what we do as the coaches, what Tom is doing with his guys and I do with my guys, we'll look at the whole week of their trades, pull up all those markups, line them up. We'll just start picking out patterns that they weren't paying attention to, because day to day you can't keep all that on mind and remember.
Right.
We'll start pointing out, look at the commonalities in your losses. Look at the commonalities in your wins. That's one easy exercise that we do almost every week with the guys. So, Boris, none of us are getting any younger, and our brains are not getting any smarter until we get that Neuralink. So it's hard to remember what you did on Monday and how you felt on Monday when it's Friday or Saturday, Sunday, when you want to do a review. Show them really quick the weekly report card, Tom. And this, any trader should be doing this. You can use ours as a sample, but anyone should be doing this. And these are great questions to ask yourself. So it's like, how well did you execute your plan? What did you do well? What did you not do well? What repeated mistakes did you have? What's your main focus for next week? What was your best trade? What was your worst trade? Just good questions to prompt the proper thoughts for review.
And what's the little checklist on the bottoms there? Because it's hard for us to see on the full screen.
Yeah.
But
so this is
habit tracker results.
Habit tracker.
I think I've seen. I've seen like these type of.
It's not new. This is just our version of it.
Yeah, exactly that. We track trading errors. So what trading errors have you made? So when we sit down with the other people that we coach and ourselves, when we look at each other's, what's the mistakes that you have made the most? What are you doing? What are you repeating?
Are you missing trades?
We can get together and
are you getting out of trades too early? Are you oversizing? If you are honest with yourself, and our guys normally are, if they pay to be in this program, they're honest. So they're tracking like, oh, today I oversized. Yesterday I oversized. And then over a month, this page here shows us what were your biggest mistakes? What are you repeating the most? Okay, next month, let's just focus on not doing that. Just one at a time. And I'm sure, Boris, because you've spoken to a lot of traders, trading is like an onion. You'll pull back a mistake of okay, you're not trading enough. You're under trading. Cool. We'll get you trading now. You're getting out of your trades too early. Boom. We pulled back one layer, solved one problem, and another one popped up. Okay, now we're getting out of our trades properly. Now you're trading too small. Now we got to fix position sizing. So it's like an onion, with these guys. And I think that as you start to peel them back, the good thing about it is the awareness that you have on these repeated mistakes allows you to not make them as much. That's the big thing. The awareness is what stops you from repeating mistakes. And last point, trading is, and I think, tell me if I'm wrong, but in trading, mistakes never stop. They just cost you less and they happen less often. So that's what the awareness is trying to do, is make those two things come to life.
So would you guys say trading the NFPs off your iPhone without even looking at what the results are while you're dropping your daughter off at school is not good trading habits?
It's good for your stress levels. If you want to be stressed out and have a clenched butthole and high shoulders all the time, go ahead and go for it.
I read something really interesting that I like. I totally 100% agree with it. I think it was Morgan Housel, who is, by the way, a great guy to read. He's not a trader, but he writes a lot of he writes probably the single best money book you could possibly buy. And his whole thing was, he basically said that nothing matters. He said strategy doesn't matter, habits doesn't matter, because ultimately all we are, he says, we don't care about money, we don't care about status, we don't care about life, love, everything. He says all we are at the end is just dopamine machines. And I thought that was really, really true, because that's literally what we fight every day. Is we just it doesn't we never want to admit it to ourselves, because we think we're so far above it. We're not junkies, but we really are at the core of it. All of us are just dopamine machines. And that's actually, realizing that really, really helps you sometimes control that, because you realize that you are just chasing that high.
Awareness. You get aware. If you are aware of the dopamine hits that you're searching for, maybe you cannot go for them. Have a little self-discipline,
Right. Speaking of dopamine hits, let's do a few dopamine hits right now, because we got a great challenge right now. We induce a little bit of stress here. Here's what we do. In challenge number 2, the opponent chooses the trade and you have to manage it. So I'm going to go to Tom first and have him lay an egg on Austin's lap, and then Austin will choose a trade for Tom.
And before we do this, we did agree before the recording, so everybody that's watching, we agreed we're going to put 5% each on this trade, right, Tom?
5% each on the
Did
trade. So I get to choose the asset or the direction. Or
you choose the asset for me.
You choose the asset and the direction, and anything else that you want to do. You can make him even do it.
If you want to choose the direction, Tom, that's like, I don't know if direction is. I think the direction should be our discretion. So you pick the pair, I'll pick the direction. That's because otherwise, like, if you just tell me to sell something and I tell you to buy something, like, didn't I just place the trade on your account then? You know what I'm saying?
Yes, because the whole idea is that you think it's a dog of a trade. That's actually very interesting. Like, you think it's a dog of a trade trying to land him into trouble.
He's going to give me AUD USD or something. That's what he's going to do.
I was looking at like Euro, Pound, GCHF, all of your favorite pairs.
I know you, Tom. This is how Tom gets back at me when I tell him, Tom, I need this change done in the spreadsheet, and it's like 10 o'clock at night. This is him he's going to get me back now.
You don't want to put him into Pound Kiwi, or
Oh, no, I'm gonna play into his strengths. I'm gonna give him an indice.
All right.
I want you to trade.
Make him trade Nasdaq just to torture him a little bit. We're talking about, like, Nasdaq has just been like, if there's ever it's the ultimate casino money remover has been the Nasdaq last couple of weeks. But go ahead, sorry.
I'm going to tell him to trade the DAX, the German 30.
Ooh, okay.
Let's go European.
Let's go. I love that. All right. Let me pull this up and take a look at it.
Now let's make him trade with 20-point spreads too. Okay.
Yeah, right. This has been on a rip. This German 30 has really been doing really well. But
it's huge. European stocks have outperformed American stocks for the first time in a long, long time. The trade has been long Europe. So again, something nobody in their right mind would have said. In the middle of the first war in Europe in 50 years, the European stocks are doing great.
What were you going to say, Tom?
I was going to say the FTSE. The FTSE is the one. Crazy, the move.
That's another one. FTSE is at all-time highs, correct, Tom?
Yeah.
Look at this.
Britain is basically on bankruptcy basis. Like, everybody's talking about the fact that because of Brexit, Britain is going to become like a middle like a third world country at this point, and yet FTSE is at all-time highs. Not even just highs, all-time highs.
So what you're making going. You know what you're making me do here, Tom? When I see here, so I'm looking at the weekly and the daily just to get an idea. Like Boris said, if you measure from January till now, German 30 is up 11.8%. I mean, that's pretty strong over 43 days. But what's interesting is if you look at that movement, which has basically been straight up almost every day, there's very few even red bars in there. Look at that compared to, let's just pull up NASDAQ really quick. NASDAQ since the start of the year, up about 20%, 19%. So if you're placing a trade on German 30 right now, it's almost like German 30 is acting like NASDAQ, which is something we've seen through some correlation. Yeah. Yeah.
Right.
So to look at German 30 a little bit closer, like I said, since we're moving up really nicely, you would think we might find resistance here where it looks like it's slowed down a little bit, but we're very close to the top of that. 15,558
Right.
is where we're at now. That's 15,557, like very, very close, basically at the top of this range here. If we take out the range, what's above it to slow us down isn't something we've seen since early 2022, late 2021. We haven't seen these prices since then. So
Right.
let's dive a little bit lower. 15-minute, pretty bullish today. Boris, what are we doing here? Running these trades to Friday, close them Friday? What's our challenge?
5-day hold, right?
5-day hold. So we can hold over the weekend.
Right. Yes.
And after we get off the stream, we can't add to the positions, just close some of them, right?
Right. You can only close the position. You can't hypercharge it.
Oh, you know what this looks like? Look at this in here. That looks like a mean head and shoulders. Left shoulder with a head in here, and then a right shoulder kind of in here with a neckline down there. And even overall, this could be a left shoulder with a head up here and building a right shoulder. That would be a little bit too much of a forecast for me, though. You know what I mean? Trying to think that this is going to come down from here. It's been so bullish this week. So I think if I'm going to trade this, I'm going to have to be short.
Okay.
Going against your favorite L50 in EMAs.
You think you got to be bullish on this, Tom? You're trying to throw me into the fire here? I like taking the other side.
He's just playing mind games with you.
Tom, I like to call the top, Tommy. I want the top. I want the tippity top.
You don't.
If we go to weekly, let's see. Way extended off the 8 EMA. A pullback to the 8 EMA would be 15,100. We could definitely see that, especially once you know me, I'm fundamentally bearish on the indices. How the indices are up today blows my mind. So I'm waiting for the indices to tick 5% down in one day. That's going to pull my German 30 down. So the question is, do I think that 5% down day is coming in the next 5 days? It's just a guess. So I think I like a stop back up at this previous structure. If we can get even 1R would be back under 15,000. That would be a lot, though, for this to take out 15,000.
It's 500 points on the DAX. That's a big move in a five.
I might need to make a few phone calls to make that happen. But all right, give me a few minutes. Let me think about this before I put into position. Tom, I'll throw it back at you. I'll pick one of your strengths. I won't throw you too much for a loop. Since I'm doing an indice, I'll give you a forex pair. I'd love to see what you're thinking on Euro USD because people are talking. I'm getting DMs about what's the dollar index doing. So if we have you trade Euro USD, you got to give us some thoughts on the DXY, which is an inverse of that.
Cool. Okay, let's go Euro USD. This is I've been looking at quite a bit this week, actually. Been doing some research into Euro USD, how we've been acting, how we've been moving. Because like you said, Boris, we've been moving slightly differently. So if I look what I've been doing over the weekend, I've just been looking at the cycle, I suppose. How many consecutive days in a row we having? What is that leading to? And 70% of the time, we have a sort of a 3-day cycle on Euro USD. And it's an interesting one. We're in the downshift at the minute. I like to trade with the trend as much as I can. Austin, what are you going to try and throw me here? I don't know whether you're going to try and second guess me.
I'll give you a second to think. They just told me in the chat, market closes over the weekend for indices. So if I place a German 30 trade, I got to be out of it by Friday, just so you know, Tom. So I'm fine with that. Yeah.
We're good.
Okay.
Fine. Okay. So we have definitely been bullish since, I think it was September last year. And the first sign that we're starting to roll back over. Can I catch the backside of this trade? Is this going to continue down over the next 5 days?
Oh, man. That's a strong trend on that one, bro. Looking at that from November, that's a strong push.
I'm just looking, where can we find some support? If we find some support.
But does the dollar influence you at all at this? Like, do you feel like the Dixie needs to be discussed?
We can have a look at the Dixie and have a look at the dollar index.
Yeah, I mean, it's just going to look like I guess Boris needs to weigh in here. Fundamentally, Boris, has the dollar bottomed at 100? Do we have a bottom? Are we going back to 110? Because if dollar index goes to 110, Euro USD is going lower.
Again, so should we punt even more for it? Like, you're punting. Tom is punting to you. You're punting to me. I'm going to punt to rates. I'm going to basically say that I think there's a reasonable chance the dollar gets a bounce here because it is pretty clear that while inflation has moderated, it hasn't died, and because it hasn't died, terminal rate now goes from 4.75 to 5, which means that, we got a lot of carry built into the dollar. 10 years today started to, back up. I mean, the whole, rate down cycle may be coming to an end. If the rate down cycle is coming to an end, dollar up cycle starts to crawl back up. So yeah, I mean, there's possibilities. It's definitely possibilities here. So I would say, I would say yes, that the path of least resistance right now for the dollar index is up, which does put a little bit of pressure on the euro. So by the way, you guys saw cable today, right? Cable was basically, bouncing along the bottom all day long. Now that I look at this, I look at everything on a 1 minute chart, but
you're short term like me. So all of us thinking about this on a swing.
I know, yeah, for 5. This is completely new.
But I did catch my eye. Well, one interesting thing about Tom's chart that people who are watching, I'd love to for you to kind of notice. So this is a very, very cool little trick that he's using. You see how he's making a big candle out of little candles. So these are daily candles, and he's kind of just bunching them all up. And what he's bunching up is consecutive moves. So in this case, you have like there was one sequence where you had 4 candles in a row. That becomes one big candle. Then you have 3 candles down, the down candles, that becomes another big candle. And it kind of just gives you, what it does is it bunches up the price action into more less granular but more deeper moves, and it sort of shows you when the breaks of those big candles happen, they tend to have more meaning, either up or down, than just the daily candles.
Yeah, you're getting a good break of structure there.
Tom, I'm going to show you something that I was talking about the market structure.
See, here we go, Boris. This is the data, Boris.
This
is what I'm saying. This is Tommy's bread and butter. Tea and crimpets. Come on.
Exactly. So look, we downloaded some trader data at the weekend, and we've started playing. So we've got how the chances of consecutive bars in a row. So you can see here that we've got bullish bars down to 8 and bearish bars up to 10. So how often do we get 2 consecutive bars, 3, 4, 5, etc.? And then I started to work out so 70% of the time, Euro USD trades within this 3-day range. So we can have 3 bearish days, 3 bullish days. And 70% of the time it goes in that. I've also then looked, what is the chances if we have 3 consecutive bearish days that we have a 4th? I know that it's now 8.6%. If we have 3 bullish days, I know it's 6% that we'd get a close above. How far do we move on average during 3 up days, 3 down days? And I've just been, interesting to see how price has been moving, right, and how certain assets trend differently. So Euro USD is, like I say, 70% in that range. If you look at something like your US 500, the S&P, you'll see that
that's almost right. It's almost a perfect Gaussian curve. It's almost a perfect bell curve on the it has a little bit of spike, like a I forget, lepto, whatever. I forgot. I can never pronounce the word, where there is some outside of normal volatility on the -1, -2 days, right? A little bit more of those.
Yes.
But what's interesting, if you go back to the euro curve, is it is normal distribution, but with a very uneven skew here. Like it's skewed. Is the green the upside days, the consecutive up days?
Yep. On the consecutive up days on the right hand side.
So what's interesting is that the consecutive down is like there's a negative skew to the euro, because there's -10 consecutive down days, which you don't even see on the up days. So when it drops, it can drop really hard, is what the chart is showing.
Exactly.
Yeah.
And similar sort of thing on the US 500. We've got a lot more instances on the right hand side. We grind up really slowly, but we have the bigger drops. And when you can see when you compare the consecutive drops, the average drops of the candles, they are a lot quicker, and that translates into the chart. So obviously we know a lot of the time, or certainly before sort of the last 2, we trend up, and you do get them. You get lots of bullish candles, and your biggest days typically are red days to the downside, and that sort of confirms this. You've got lots of grinding up with these small bullish bars, and then you get the big bars that take out 10 up days. Right. So it's been really useful to go through that data over the sort of the weekend, starting to look and just see how things are adapting and changing through the market, and looking at the cycles.
Right. It's the the old saying, escalator on the way up, elevator on the way down.
Exactly. Yeah.
So Which so you're a dollar long short. What are we doing there, Tom?
Yeah, Tom, you got. I'm trying to get short German 30. The back end team is helping me out right now, so I'm going to be short German 30. Tom,
You're short in German 30.
stop loss at 15.8.
Stop loss at 15.8.
Yeah,
All
I'm
right,
giving
so you're going long. You're going short. 15.8 is your stop. Cool.
Yep, I'd like two down days here or a down day. I got to close it by end of day Friday, so I think we should see.
He's going to get clipped. I'm telling you. You know what's going to happen? He's going to get clipped on the stop, and then it's going to drop like a stone.
Yeah, you know how it be, Boris. That's your luck, Boris. I got better luck than you. Come on.
Right. So what are you doing, Tom?
What am I doing? That's a good question. I am
buy the euro. Do the thing that's uncomfortable.
Bro, I'd buy the euro, Tom. If I was trading your account, I think it's.
I'm not going to go against 5 days. It's not at least. I'm not used to holding trades 5 hours, let alone 5 days.
That's interesting. For all the data intensity that you do, that you're a relatively short-term trader.
Yeah, exactly. We're starting to try and find some bits to use. Right. I'm going to short Euro USD, I think.
Tom, don't forget, you can close this whenever. Like, you can close this trade tomorrow if it drops and it's in profit, or whatever, goes up and it's in profit. If you buy or sell, I know you still don't know if you're buying or selling, but whatever direction you can close it. Yeah, you don't have to hold it over the weekend. If you think World War III starts this weekend, you can sell it and take your profit.
No, I am. I'm going to sell, and I'm likely going to have my stop above last week's high. Might give myself a little bit of extra room then if we're on a 5-day trade.
Yeah, give yourself some good room. And remember, Tom, I think, Boris, correct me if I'm wrong, but we can also put on a couple other trades here before the stream is done.
Well, we have one more segment. We're running a little long, but you guys had such interesting stuff that
Boris, can we get your take on the Russia stuff? We need an update from you really quick. I think the audience appreciate that.
My take is it couldn't end soon enough. I
think it plays into the market, right? I mean, the market is looking at that still. There's a lot of money going to Ukraine, more money on Ukraine than on the Vietnam War already.
Yes, no, but I mean, the point is, it could be like the Korean War, just endless, stalemate. Yep. That's my problem is that, as I'm afraid that it could drag on, and the longer it drags on, it's obviously the worst part is the human life, but economically, I think it could start to really impact across Europe again. Everything that we feared this winter could come to pass next winter. So, there's just it's a risk.
Yep.
My view, I just you don't want to know my view. I would just if I was Biden, I'd hit the red button right now.
Yeah, you're aggressive on it. I mean,
I am. I want him over.
I'm over it. I'm with you. I agree with you. I'm with you. I think he wants to posturize moving his nuclear ships and try to shake up markets or shake up our administration, whatever. Come on, bro.
Yeah. I mean, come on. Who you playing? Who you playing? You're living on.
I'm not trying to sound not trying to be antagonistic, but it's like, bro, how many times are you going to be like, if you do that, USA, we're going to push the button, and then it's like nothing happens. It's like, bro, boy who cried wolf. Come on.
Right. Yeah, we all know that. It's true.
Yeah.
Sorry, but we're not going to get into geopolitics. So, Tom, you have the euro. You going long, or are you going short? He's still look at the pressure on the man.
I am on the ropes in the trading battle. I am on the ropes. I'm shorting. I'm going to short.
Attaboy, Tom.
Right.
Yeah.
You both lose, and it'll just be whoever loses least. That'll be perfect.
Yes. That's it. Are we? So what we're doing? Are we going the agreed stake?
Yeah.
So it's like golf, right? It's like golf. It's
exactly
not who wins.
All the scores are negative in golf. So whatever.
That'd be great. Wouldn't that be great if we got paid on negative P&L? God,
I was talking to somebody about that. I was like, everybody wants to get into trading, but you don't realize you'll do everything right and still lose money. Like, are you sure you want that?
Right, exactly. But it would be great. If you just you lost 10%, everybody else lost 20%. You win, you get all the money.
Right.
It doesn't work that way. Okay, so we got one last challenge. We're kind of running a little bit late here today, but I think it was such an interesting show. Today, so the last challenge is basically trader's choice, sort of your strongest. This was like, let's sabotage the other person. Now let's give you the best setup that you see, your class A, your A+ setup. Give me your A+ game here of what you're seeing, any instrument around, commodities, indices, forex, even crypto, which is not really an asset, but but an amusement. But yeah, although the Bitcoin was up to 5.5% today, it was just like,
Yep.
right. It was like
8% now. 8%.
Who's buying Bitcoin? Like, which guy, which billionaire out of Asia is trying to desperately pump this thing up so that he can get out of his position?
Yep.
Yeah.
Yeah. All right, Tom, you want to go first on this one? You want me to take it?
You go first. I'm just in the corner with the cut man at the minute.
Got it. Okay. I got you under the eye. So I'm looking at US 500, S&P 500, Boris. I feel like this is what I've been trading all year so far. I've had a really good read on it. It's in an interesting spot. That's the summary of today's episode, the interesting spot. To me, this is bullish on technicals. 8 EMA is above the 21 EMA. 2 days ago, this is CPI, this red bar yesterday. Before that, this 3-candle bullish formation was a strong bullish sign to me. Yeah. Sentiment on the bottom here on the RSI, this yellow line is a sentiment indicator. It's been above 50 since November of 2022.
What is sentiment RSI? Is that a derivative?
It's pulling it. No, it's pulling it's a moving average pulling its value from the RSI. So it's basically just smoothing out buyers or sellers. Who's more in control? Do we have more buying or more selling? That's all it's really saying.
So it's a moving average of the RSI variable.
Exactly. Correct. It's pulling from the close of the RSI at each candle. Yep.
Interesting. Okay. Yeah, and obviously it's above 50. So it can go, it's sort of it follows the RSI in a slow high format, basically.
It follows the price.
Zero to 100.
Think about it following, like, let's say we get a strong move up in price, that RSI will slowly start to crawl itself up. For example, look at what happened here. RSI dipped down at our lows in October. RSI and sentiment was at 40. But by the time price action was back at 4,000, sentiment was just getting bullish at 50. So price will move first. This is not a forecasting indicator, but it's something to be reactionary with, where now, since we've been very bullish, it's hard to be bearish. That's my point. It's hard to want to sell SPY right now. The bullish formation, CPI yesterday was bearish, but look at that bar. Compared to some other CPIs, this was CPI back here. The last big down day we had, that was a CPI print. So we've had some huge CPI days, but like you said a little bit earlier, we're in a real bear market, maybe CPI, or coming out of a bear market CPI. And to not get any selling there, not to get a push to the 21, like I said, hard to be bearish. But since I'm short, like,
like looking at, just the candlestick structure is very bullish. You got higher lows all the way through.
Extremely bullish.
Yeah.
Extremely bullish.
You're right. But, until and unless it breaks is this a 20? The red is 20?
21, yeah.
21? Until and unless it kind of, touches or breaks the 20, there's only one structure to trade, which is a long side.
And when you think about it like this, we haven't been back under the 21, which is where I like to look for buys in this case, since the 19th of January. That's a month ago. So the whole month has been very bullish, which is why if I'm going to put a trade on this before I pass it to Tom, I'm going to sell this just like I'm selling German 30 with a stop at like 42.50, just above 4,200. Because I think we're going to get some selling pressure here in the next few days. Could be right, could be wrong. I think that we've had a really strong start to the year, but at some point we are going to run into there's strong resistance above here, not just above at like 4,300. I think you have stronger resistance back here at, like I said, right under 4,200, where we've seen these pins too. So I think we can look for shorts here. If they take out 4,200, I might stop being as bearish. We take out 4,300, no way. You can't be bearish anymore. So.
Okay, that sounds good. So short the S&P.
Short the S&P, short German 30. That's my play. Yeah.
Very good. Very good. And what about you, Tom?
So I've had a quick look, and I want to be looking to sell a pound pair, I think. Pound shorts have been on my watch list for a while, especially given the CPI news today under forecast at 10.1 versus 10.3. So I was just flicking through some of the pound pairs on my watch list, which I've been looking, seeing where we are. So you can see on GJ here, we're at last month's high. I know that over this last two candles, we were up 2.4% on the rate of change, which is above average, which the average is sort of 1.03. So I know that we're extended over a 2-day period. We've got a continuation, a bit of a reversal today to start. That's why I am looking to continue to take this to the downside, I think, on GJ. My other option would have been potentially GA, where we have underneath this resistance at 175, so a nice round number. You can see that we've got the breakout and retest. We've shown a lot of resistance in and around this level, but the last 3 days have been pretty flat, not giving me any sort of an indication on where we want to go. And the problem is
a lot of Greystone dojis on there. I mean, that's
And do I want to risk going into the Aussie impact news, so the employment change tonight at 12:30? That could be the catalyst that shoves this lower and wins me the battle with the KO, the knockout. But
Tom, I'll tell you, I went heavy on the second trade too, Tom. So you don't go too small. Don't go too small on that second trade, bro. That's all I'm saying.
Come on.
So it's either going to be a GA sell. GA sell, but I've got no stats to back it up with any extended. So I'm going to continue the move on GJ to the downside.
Yeah, GJ.
Yeah, I'm going GJ sells.
GJ sells and Euro buys. Is that what you're in?
Yeah.
All right. And I'm selling German 30 and I'm selling SPY. The challenge has commenced. First one of the year.
The challenge has commenced, gentlemen.
The gauntlet.
The gauntlet has been thrown. Yes. So very good. All right. So it's been, it's been a really interesting show. Everybody who's watching us, of course, we're going to update this. Please make sure you absolutely follow the Trading Battle every single episode. Hopefully you guys really enjoyed this show. This was a really fun show. Lots of interesting statistics and a lot of interesting data for us to take a look at.
Setting the bar high. ASFX coming in setting the bar high.
ASFX brings it on. Speaking of which, talk to us a little bit about ASFX and what you guys do and where people can find you, because I think Austin is a great guy to follow, and he brings a lot of interesting stuff to the table.
Thanks,
where you got? Sure.
ASFX.biz is where you can find all information. We have events this year. So Tom is hosting a free meetup in London. We've already got like 50 people almost RSVP'd for that. So if you're in London and you're interested, asfx.biz/events. We've got open space coming in March, not much space, but a few spots for our mentorship group, the Black Shirt Club. Again, more information is on our website. And Tom is running our London session live trading room on ASFX TV. I run the New York session a few days per week with another guy, Evan. Tom is one of our London guys.
What is ASFX TV? Do you guys broadcast on YouTube?
It's not on YouTube. It's behind a paywall, a monthly fee. It is basically the Netflix for traders, where you can tune into us live, New York and London every day, and they're recorded. So you can watch recordings of trading sessions, which is very valuable. So that's a service that we offer that no one else really does. That's why we kind of filled the gap with it. We wanted to be something where you could be like, I'm going to cut out subscriptions that are costing me and not being good for my future, and I'm going to get ASFX TV instead, and I'm going to go learn something and actually make money.
How many hours do you guys broadcast?
2 to 4 hours a day. Depends on how many guys we have running. I'd say 2 to 4 hours a day.
And you guys like share charts,
share charts, call trades, 100%. We called trades this morning, 100%. Yep.
Okay. Cool. Yep. Cool. It's really nice. All right.
Boris, wait, last thing. You got to come on our podcast. I forgot to ask you. We have a podcast, the Day Trading Show. We've had Crudelli on. We've had other people.
I'm not allowed to come on podcast because I have such a potty mouth that nobody, I'm not allowed
Boris,
to.
That's a lie. That is just a lie. Like, I have the worst mouth and I have the podcast, so that can't be true.
Yeah, exactly. Only the degenerates in my room, as all my traders are known, because we're known as the degenerate traders. Are allowed to do this. No, it's fine. I'll be very, very happy to do that.
Yeah, I'll reach out to you. We'll make it happen. So, maybe listen, next episode we got to talk about some prop stuff. We got to talk about surge. We got to catch up on that stuff too.
Okay, super. Last question to you guys. Which charities are you guys playing for?
I'm doing the animals again. What are you doing, Tom?
I'm doing Great Ormond Street Hospital in the UK. So they specialize it's a children's hospital, and it's been very close to our hearts over the last year. So I'm going Great Ormond Street. Gosh.
Very nice. And what's the animal charity that you're working for?
The Wildlife
Foundation.
Yeah, Wildlife.
Yeah, the Wildlife Friends. Yeah, the Friends of Wildlife, the WEF. Yeah. Very good.
Yep.
Great. Well, two great charities. ACAP has given thousands upon thousands of dollars in money to charities over the time, so it's just wonderful to see it. Great trade ideas, great market insights. Just perfect way to start the year for everybody. I hope you guys all really enjoy it. I will see everybody on the next Trading Battle and other things that are coming from us in the year. Keep an eye out for all the content that we're going to have for you guys. In the meantime, I want to thank both Tom and Austin for participating as our first official 223 Trading Battle. Gentlemen, thank you so much. This is Boris Schlossberg for the Trading Battle. Over and out. I'll see you guys in the markets.